Analysts expect the MPC will leave the key interest rate at 8.25% for a seventh straight meeting this Thursday. Could this expectation be a sentiment shared by the majority, or some of the view that we could see our first cut? Well, economics editor Tshepo Mongwai joins us to discuss just this. Tshepo, good afternoon. Thank you for joining us.
Good afternoon, Fundo.
No, it's always a pleasure to have you with us. I was actually quite comforted by the fact that when looking across many publications, I could see that the expectation at the very least was that the repo rate would remain unchanged. Nothing beyond that. There was no specific publication talking of increases. Just talk us through the general sentiment from most commentators around this.
Well, the general sentiment is that we've actually reached the peak of our hiking cycle. So it's unlikely in this cycle that you are going to see any rate hikes. The discussion has now shifted towards when is the Reserve Bank's Monetary Policy Committee going to start cutting interest rates, because we can actually see in the economy that the hikes have actually worked through to the economy. There's a lot of influence and decision making based on very high interest rates. It's affecting different areas of the economy, especially consumers who have really been under pressure for quite some times. So we are hearing that perhaps maybe later this year we could see our interest rate hike, but I think the most important measure is consumer inflation. Where is consumer inflation? It has been very sticky on the downside.
Mm-hmm. But what have we heard now? Because it seems as though inflation expectation for the next 2 years has declined, which is what they're attributing this possible decision to perhaps keep it at 8.25?
Yes, the Reserve Bank, they've commissioned the study by the Bureau of Economic Research that's on BR economic inflation expectations. The second quarter numbers actually show that most of the respondents, the scope of the survey looks at your trade unions, economists, households and business people. They do expect inflation to average around 5%, perhaps just below 5% for others. That's still very high. And remember, the issue of anchoring inflation expectation is quite key in terms of what are the people expecting the inflation to be in the next 3 years. And if many people are still expecting inflation to average around 5.3% this year, next year 5%, only in 2026 at just below 5%, you can see that it's going slow. So that influences the decisions that people take when inflation is expected to remain elevated, because they start to demand higher wages. And that fuel the fires of inflation for quite some times. So it's one of the issues. And the bank has also said that, yes, inflation is coming down, but they would like to have it at around 4.5%. Now, at 5.2%, the previous number for May, you can see it's still very high. The bank actually, the governor would like to see the target revised even lower, maybe 2 to 4% as the target.
That means we would see cuts very late into perhaps not even next year. But what has been the property market's response right now? Because I remember quite vividly that around COVID time, at the height of COVID, everybody was purchasing a house because we heard the interest rates were low. And there were those that warned that be careful, you purchase a house now. But there's going to be a time when we start to see a hiking cycle, and it has come to be. Are we seeing a lot of people letting go of their houses at this point? Well,
affordability, it's very, very important. And if people are just, making it through, you would find it very difficult when interest rates go up. So yes, there's a study that came out about a week ago that showed that there are people who are defaulting on their mortgages. But remember, one of the responsibilities and the role of the Reserve Bank is financial stability. So they will have a holistic picture of how is the financial sector, banks in particular, are doing in this high interest rate environment. If there's any significant risk, as more people default on their mortgages, they will have to change their stance so that it becomes more accommodative, so that they deal with that particular risk if indeed they've identified it. But from what they've said, that is not the risk at the moment. But very importantly, I think we must listen to the tone of the governor in terms of what are they seeing, what's their overall interpretation of the current high-frequency numbers that we have seen released in recent weeks. And that will tell us if indeed they are quite convinced that inflation is coming down constantly, and indeed we will eventually get to that 4.5% target band sooner or later.
But we know the governor, very risk averse. Tshepo, thank you very much for joining us this afternoon. That's SABC News Economics Editor Tshepo Mongwai.